Hello everyone, welcome to Intraday. Hope you're having a good Sunday. Today we're going to be seeing how to use CPR and its 4 logics for intraday trading. It works beautifully. See, these are the 4 logics that I've written. You can take a screenshot or write it down. And this is the CPR. I've just hidden the price action. Once I explain these 4 logics, then probably we'll turn on the price action and do some backtesting and show you how this works. Backtesting meaning I'll explain each point, show example where it worked and the days where it doesn't work and there is no trade based on CPR. Now, how to add the CPR indicator? The one that you're seeing right now is a custom CPR that is made by me. You won't be able to see this. It's not made public yet. Only if I share the link to any particular person, they can view it. But you don't need this. The only advantage of this my CPR is it will plot the next day values. Okay, most of the CPR, now say for example, this CPR King Research is a good one which you can use. How to add this is just go to indicators, type in CPR. You'll find many. You can choose the most convenient one. There are which plot weekly, monthly pivots, everything. So you'll have to experiment, just find which is the most simple and the easy one. The most simplest that I've come across is this King Research and my CPR. So, and once you add it, you'll have to, it'll look a little messy. You'll have to come to the settings and change according to your needs. Like you want R1 in red. I've kept the resistance in red and support in green. And CPR range, this is the middle is the CPR range in this color. So I can easily identify. See, what CPR is nothing but how these pivots have arrived, right? It's nothing but based on a formula. It's there in the Google. You can just type CPR formula. It's based on previous day high and low. It's a simple formula. We don't have to mug up the formula or anything. So what will the CPR have is we'll have the central pivot range, that is the middle area, the middle 3 lines, and the center line is the pivot. Then you will have R1, resistance 1, resistance 2 and resistance 3. You will have S1, support 1, support 2, support 3. Here you are seeing PHD and PDL, that is nothing but previous day high and previous day low. In this my custom CPR, I even have plotted the previous day high and previous day low. But in case you make use of the other CPR, you will have to manually plot previous day high and previous day low. Now, what is previous day high and low if somebody is not aware of it? See, this is the Friday trade, right? This is what happened on 17th September. Now, for 17th September, what is the previous day high? Previous day is Thursday. Thursday high is this at about 37,700 and Thursday's low is this. So, for Friday, the previous day high and low are these. Thursday's high and Thursday's low. So if you are using certain indicators, CPR from few people, you will have to mark it manually. So that's fine. Previous day high, it can be visible for the naked high. You don't even have to mark. But for initial days, yeah, it's better to keep it marked. So for my explanation, I'm going to use the blue lines for previous day high and previous day low. I'll just turn off this price action for now, just to explain the CPR. Now just assume previous day high is here, previous day low. Okay, so first what I'll do is, these are the 4 logics. Okay, I'm going to explain these 4 logics without any price action, just explain the logic. Then do some backtesting by turning on the price action and seeing where this works. There are days, see, any setup, right? Any setup, anything, any logic, it doesn't work always. There are days where there will be a no trade. See, this works most of the time. Say 60% of the time, the CPR logics work. There are few days where the CPR doesn't work. Means there's no trade based on the 4 logic. So in such cases, we won't have any trade based on CPR. Okay, I'll show you when are those days where there won't be any trade. So let's get to the first one. The first logic is the price. If the price breaks R1 and previous day high, then the price may hit R2 or 50% of R2 and R1. Okay, so what the first logic states is, from anywhere, like wherever we open, See, the blue line is the previous day high and this is the R1, right? This zone is the previous day high and R1. There are times where the R1 and previous day high will be wide also. So we'll have to consider that wide range also. Here it's pretty narrow. Now say from somewhere the price comes and breaks this previous day high and R1. Okay. In that case, there is most likely a chance the price will hit R2, or the price may hit 50% of R1 and R2. What is 50%? How do we calculate it? Nothing but exactly half of this. You can manually calculate it, or you can just use simple Fibonacci retracement. You just drag from R1 to R2. You will get this 50% mark, right? This 20, 30, 50. Yeah, you can just mark this. You can mark a line and change it part of the target as red. So I have marked 50% of R1 and R2, and we can remove this fib. It will look too messy with the fib. So what this states is either we might see R2 or we might see 50% of R1 and R2. This will be the target. So this is the moment R1 breaks and the previous day high breaks, we can enter with this as the target. And based on price action, if we get a price action that might be reversing from here, we'll have to book profit, or we can sit for R2. And then if it's a very bullish market, then we're going to hit R3, which doesn't happen every day. Then again, we can take the Fibonacci 50% of R2 and R3. Those are the further targets on the upside. But from R1 to R2 is a good target. Okay. Now coming to the second point, that is, if price breaks S1 and previous day low, then the price may hit S2 or 50% of S1 and S2 and S1. So it's nothing but the reverse of what we saw earlier. That is, now say if the price starts falling from somewhere, if it breaks the S1, support 1 and previous day low, then most likely we're going to hit S2 or 50% of S1 and S2, 50%. Now again, how do we see 50%? Just take the Fibonacci tool. You'll find it over here. Just click on Fib retracement. Keep it at S2 and drag it all the way until S1. And just mark this 50% line. Here you have the 20, 38, and this is the 50% line. And then we'll get rid of this. So if the price breaks S1 and the previous day low, this blue line I'm using as the previous day low, the price may hit this 50% line or the S2. We will have to book our profits depending on the price action. Okay. So these two are pretty simple, right? If previous day high R1 breaks, then target is R2 or 50% R2. If S1 and previous day low breaks, then the target is 50% of S1 and S2 or S2. And it's not necessary that it will only come here. It can even go to S3 on certain days where it's very bearish or bullish. So we will have to trail our stop loss. Now I told you about the entry. Now what about the stop loss, right? You cannot enter a trade without a stop loss, right? Now for the upside, if the price breaks and you take a trade, your stop loss will be R1. If any candle comes below R1, you'll have to take a stop loss and exit with loss. And probably again, see what happens certain time, the price goes up, comes down, goes up, then it gives a break, right? So at the first shot, you think it is, everybody thinks, even I enter thinking that it's a breakout and I enter. Sometimes it comes down, it hovers in this area and then it breaks out. So in that case, we can enter and take a stop loss and re-enter. There's no harm in that. But always take stop loss, because what happens, there are days even where we go previous day high R1 and this suddenly dip. So in those cases, the stop loss will help us. And the same for, if you if the S1 and the previous day low breaks, right, and we enter, the stop loss is S1. If any candle, now the price is moving like this, now if any candle comes back above S1, we will have to take our stop loss, or you can trail the stop loss also. Don't see, there might be a price action where it will come down, and now we think we're going to hit S2, but for some reason it reverses. So don't expect that again it's going to come down. Take the stop loss here. So when you enter here, if your stop loss is here, we will lose only few points. Okay, now say if we don't enter and it reverses back to the CPR, then we'll be in big profits. So keeping the stop loss at the right place is also important. We can make use of the pivot points itself, S1 and R1. And the moment you start going in profit, you can start trailing stop loss. There's a video in my channel under the learning section of the playlist, how to trail stop loss. You can check that. Now say the price is moving like this. So you can start trailing your stop loss to this high and this high. Now say for some reason it didn't touch S2 and it started reversing. So why lose all the profits, right? Just because it didn't make 10 points or 12 points and it started reversing, why lose all the profit? So S1, any of the pivot points, or if it comes close to a pivot point also, we will book our profits. At least that's what I do. And this is not something, these 4 setup are not something that is made up by me. It is there from a pretty long time. Many people use it. It's just that not many people share it. It is all based on a book of a pivot book, which is a pretty famous book. This is all taken from that book itself. I have not come up with this logic or anything, just sharing that. Now the third point is, if the price opens between CPR, and this is the reversal. These two are just direct momentous trade. This is a reversal techniques. These two are a reversal logic, third and the fourth point. If the price opens between CPR and R1 or previous day high, the price may hit R1 previous day high and then reverse back to the CPR. This two logic is where I make a lot of money, the third and fourth. Obviously 1 and 2 also work, but this is a more comfortable trade for me, third and fourth. Now what this states is, as written, if the price opens between CPR, this is the CPR range, and R1 or previous, say the price opens anywhere in between this range. Assume the price opens here. The price may hit R1 and the previous day high and reverse back to CPR. Now, what is this may hit and reverse back? Now, if we open here, the price may go to previous day high R1, and if it doesn't take out on the upside, okay, the price may hover in this area and start dipping. Once it start dipping, it will come back to CPR. That's what this means. We should not get confused with the first point. See, first point is if the previous day high and resistance breaks. This third point is if it doesn't break, okay, it goes up, it doesn't break, it consolidates in this region, and if it starts coming down, we will hit the CPR range. And the CPR range means not exactly the pivot, we can even hit the top line of the CPR. See, in certain cases, CPR is little wide, okay, this Thursday's price action. Now says the price went up, R1 didn't take it out on the upside, it reversed back. It can even just come and touch this CPR top point or the pivot. And again, if we take a short position like buy puts or sell futures, okay, the stop loss will be the R1. And there are days from R1 it will even reverse back to S2. Not every day, few days it does happen. I'll show you the examples. And the last point is nothing but the reverse of this third point. If the price opens between CPR and S1 previous day low, then the price might hit S1 previous day low and reverse back to CPR. So what this day says, if the price opens between the CPR and S1 previous day low, say somewhere over here, the price may come here, and if it is not taken out on the downside, right, we might see a reversal back to the CPR point and even higher. The next target will be R1 and the previous day high. So these are the 4 logics of CPR. Now let us just check few examples quickly. It's going to be a lengthy video. Please do watch it fully so that everything is understood. I'm going to use the blue line for previous day high and previous day low because that's historically that's not marked in the CPR that I've written. That is not possible as of now. See, right now the Banknifty is at all-time high, right? So we don't have too much of previous day high. So we'll do some backtesting from behind. See, on this day, on Friday, what happened? The previous day high was here. Okay. So there's too much of gap between the previous day high and R1. But the one good trade that I had over here was once this was going up, once this R1 was broken out, right? I'm on a 5-minute chart in Banknifty. Once this R1 was taken out on this candle, I entered long, assuming we will hit R2. And my first target was 50% of R1 and R2. So the moment I saw this rejection coming and assuming that we're going to hit R2 or 50%, I entered here. This was one trade that I've taken on Friday. I entered after this green candle, and the moment this red candle started forming at 50%, right, I booked my profits here. See, this exactly hit 50% and started reversing. So see, if I had assumed that, okay, we're going to break R2, if we are going to R2 and just had, even after getting this red candle, I would have lost so much profits, right? I would have lost all my profits. So the moment this red candle came, I exited and booked my profits and again entered a short trade. When this R1 was taken out, we entered short and traded until the CPR pivot point. See, on this day, how the price from R1, the previous day high was pretty wide. I'll show you examples where it was narrow and we exactly reversed to the CPR range. Now just check the Thursdays. For this day, the previous day high is here and the previous day low will be this, right? So this is for the first point. Where is that? The first point, right? The example for the first point. The previous day high is the blue line and this is R1. When this was taken out in this candle, we could have entered long with targets of S2 and 50% of S2 and S3 and even S3 hit on this day. See, based on just the CPR logic, if we had entered, we would have got a good trade. Even for some reason, at 50%, if we had exited also, we would have made money. Now this day, 15 September, is a beautiful example of the fourth point. What is the fourth point? If the price opens between CPR and S1, previous day low, then the price may hit S1 previous day low and reverse back to the CPR. Okay, this is a beautiful example for that. See, for this day, 15th, the previous day high is here and the previous day low is this, correct? I'm talking about this price action, this day, 15th. See, what happened here, the price opened at CPR, but the logic stage between CPR and this, right? But the price opened at CPR, that is okay. We came down to the green dotted is the S1 and the blue line is the previous day low. We came down until here, took support at S1 previous day low and reversed back to the CPR, and then we went even higher until R1 and R2. But see from where the price reversed, exactly from the S1 and previous day low. Since it didn't take out on the downside, we reversed on the upside. Even this one trade, if we had caught, see, in these scenarios, I go with big lots. Even this one trade is more than enough for intraday profits. and see how beautifully the price takes support at CPR and again shoots up. So if you want to re-enter again at the pivot point, we can re-enter with a tight stop loss. See, this is one trade that I did take. Say if we enter here, right, if say over here we started buying 36,500 call, then the stop loss will be the S1. If any candle had come below this point, I would have taken my stop loss. Sorry. And this day, 14th September, is a very good example of the third point. Now, what is the third point state is? If the price opens between CPR and R1 previous day high, then the price may hit R1 previous day high and reverse back to the CPR. Okay, where did we go? Yeah, here. And this is one trade that I've taken personally and made good money. See, for this day, 14th September, we have the previous day high over here. R1 is here. This is the R1. This is the CPR, and the previous day low will be over here. Okay. Now, what happened over here? This is a classic example of the third point. The price opened. This is the opening point where the price opened, right, for 14th September. The price opened between CPR and R1 previous day high. The blue line is the previous day high. Okay, the price opened here. So the moment the price opened here and started going out, even though we got this bullish candle, I was a little skeptical. I was just waiting. We made a high, we came down, again made a high. Then when we started getting these candles, right, I took a short position. Actually, I should have waited until this R1 was taken out. But I entered a short position here with a good stop loss, with a proper this zone as a stop loss. See how the price went until previous day high and R1 took support in this region, and then later part of the day. See, sometimes this reversal move happens immediately, or it takes the entire day to happen. The entire day we were dipping, consolidating, and one hard fall came until CPR at about 1 o'clock. See, I entered short here with few lots, and once R1 was broken, I entered few more lots on this day. And I was not in too much of profit because again we came up, the premiums were dropping. But when this fall came, I was in good profit, immediately exited because we hit CPR. Just see those four logics are just not made up like that, right? It's obviously somebody would have researched on it and given those logics for sure. And see how beautiful it works. The blue line is previous day high. The red dotted is R1. We went to previous day. If we had broken this, yeah, we would have gone up, but we didn't break it. We reversed back to the CPR. That's why I think the CPR indicator is one indicator that's really beautiful. I stopped using everything else. I do know everything, all the indicators that is there, most of them at least. RSI, stochastic, MACD, cloud, Ichimoku cloud, Bollinger Band. I do know everything, but the only thing that I'm using right now is the CPR. See, this is for the second point. Okay, this day was a multi-bagger day for me. I made pretty good money because we got multiple confirmation. We can also take confirmation with including the price action as well. See, for this day, 13th September, the previous day high is this and the previous day low is this. The price opened at CPR, but when we started coming down, we broke the previous day low and we broke the S1. The green dotted line is S1. And also we broke a good support based on the price action. So took a short here. Okay, when the price retraced close to S2, took a short here with this S2 as target and 50%. Let's see if this hit 50%. I think it did. But I booked my profits probably at S2 itself that day. I don't remember. But I remember entering right after this previous day low was broken. See, this is S3 and S2. The price exactly hit 50% and then reversed back. See, from S1, when we come to S2, this itself is a good target and 50% of S2 and S3. See, for some people who didn't book profits here thinking it's going to hit S3 and it's going to go lower, how the price reversed and probably they would be in loss for the day. See, if somebody had got a good entry right over here, right, when this support was broken, okay, if that entered here and not booked profits here for some reason, by the time they here, they would have been in minus loss. But people who know the CPR logic, either they would have booked profits at this S2 or they would have booked profits at this 50% for sure. Whoever use CPR and these logics. And now some of you might think, what about the day when it goes wrong? Like, does this work always? Certain days it doesn't work, right? And that day would be when the CPR is wide. Okay, see, even on this day we took a short here and booked profits here. But when we have a wide CPR like this, okay, and the price stays within the CPR range, it's most likely a no day for option buying, but it's a good day for option selling. You can sell probably somewhere close to day's high calls and somewhere close to the previous day low puts. You can make nice money. So if we have a very wide CPR, it's most likely going to be, and see, half of the day on this day we opened here, came back to CPR, and by 10:45, 12, by 1 we are still within the CPR range. So there will be no trade for option buying. We can do some scalping, but that requires a lot more skill for that. See, these are some good trades where the previous day low and S1 broke and we came down so much. And why 50% is also the one target that we need to keep is, see how we reverse back from 50%. That's a good thing to keep in mind. So this is how we can use the CPR for trading and the 4 logics of CPR. And wherever we enter, the stop loss will be the pivot point. Now say for example, I'll just, okay. So wherever we enter the stop loss, now say for Friday, right? Now for tomorrow, Monday. Now say assume we get a gap down, we get a support over here and start reversing back. I enter a 37,400 call or 500 call. My stop loss will be the S1 line. If any candle goes and comes below, in that case we will have to take stop loss. See, for example, in this case, okay, on Friday, let me just explain this stop loss and we'll be done with this video. Now assume on this case I went long, and for some reason I was thinking I was adamant that we're going to hit R2 for sure. But what happened? The price came. So probably at this candle I would have taken my stop loss. In certain cases, don't wait more thinking that we'll come down and reverse back. We will lose probably even 50% of our capital, whatever you have invested, if we wait. So this is it, guys, for CPR. Hope this video helps you. Hope everybody can trade well. If you do like this video, please hit the like button and subscribe to this channel for more videos. And